So we're going to talk today about the clergy housing allowance exemption, which is very important for clergy as a way to reduce your taxable income. But to understand that fully, you need to understand about clergy taxes. You, as an ordained member of the clergy, have a dual tax status. That means that for federal and state income tax purposes, you are employed and should get a W-2 because your employer is going to withhold your federal and state income taxes. However, for SECA tax, which is what pays for Social Security and Medicare, and SECA is your self-employment tax, you are self-employed. So usually that means you would make quarterly estimated tax payments for your SECA tax. Because you have this dual tax status, you do not have to have your employer withhold any of your taxes. However, you can ask them to withhold your taxes. They will withhold your federal and state taxes. And then if you tell them how much SECA tax you want withheld, they will withhold that for you too. The advantage to having it withheld by your employer is that they will submit it on a regular basis rather than having you have to make quarterly estimated tax payments, which for a lot of reasons is a lot easier. So let's start talking about the housing allowance exemption. Next slide, and Dolly.
Okay, so as Tony Marie just said, you have, as members of the clergy, you have this dual status. So some of your compensation will be subject to federal income tax, state and local tax in some areas. So basically your tax rate would be based on whatever income level you would be based on your earnings. Something to keep in mind is that your self-employment tax, which is also known as SECA tax, all of your compensation, inclusive of housing, is subject to that tax. So just keep in mind that you always need to include your housing when calculating your self-employment tax. So basically 100% of your compensation will be subject to this self-employment tax, which is obviously Social Security and Medicare. Next slide, please. Okay, so what income is taxable while you're working? So basically your cash compensation, you should be looking at your letter of agreement and decide what are my sources of income. So basically some of you will get just, some amount as cash compensation, some benefits, some people get contributions to a 403B, but that contribution, some of you have been asking, is my contribution to the 403B part of that taxable income? It depends on how it is done. So that's something that to keep in mind. And others type of income such as consulting, supply work, counseling work, all of those sources of income is what we consider taxable income for federal purposes. And when we say federal, we're saying also state and local. And as I said before, what is taxed for a self-employed? All of your federal taxable earned income will be taxed, as well as your housing allowance. So I like to say 100% of your compensation is subject to the self-employment tax or SECA tax. Next slide, please. Back to you, Tony Marie.
Thanks, Dolly. So the housing allowance exemption, for those of you who are in the clergy pension plan, you will follow the rules of the plan. So you're going to figure out what the value of your housing is, and that will determine how much of your total compensation can be not subject, in other words, exempt from federal income tax, and maybe state income tax. States do it differently. And keep in mind that the definition of the value of your housing is not the same as the way that we calculate the value of your housing for your compensation purposes, for your assessable compensation purposes. So, for example, if you live in church-provided housing, the value of your housing is 30% of your cash compensation. But that is not how you would define your housing for the exemption purposes.
For tax
So we'll talk
purposes, yes.
for I'm sorry, for tax purposes. So we'll talk a little bit more about that in a minute, Dolly.
Yes. Next slide, please. Okay, so as we have been saying, what is excluded as housing for federal income tax purposes? So obviously the cash housing allowance, we always need to keep in mind that there are three, I always call this a game, a calculation game. You need to be thinking about these three calculations. So you are only allowed to exclude, and I like to use that word instead of exempt, because some people say exempt. It is an exclusion from your taxable income. So for purposes of excluding housing, you need to always calculate what is the lowest amount, as you know, as we have on this slide. Is it the vestry resolution? Is it the actual housing expenses that I had for the entire year? Or is it the fair rental value of my home, inclusive of furnishings and utilities? So once you do the calculations and you say, okay, I have those three numbers and the lowest is A, that is the number that you're going to use or that you're going to exclude for federal, for taxation purposes. And if you have church provided housing, the fair rental value of that, of what is being provided to you that your church is paying is what you will include in your calculation for SICA purposes. You would not include that as, you would not exclude that from taxation as that's not included on your W-2. You would only include it when you calculate the self-employment tax. Next slide, please. Okay, so some of you have been asking, okay, what do we do when we are just doing work during a certain period of time? And as we're saying here, if you are working in an interim position for an indefinite period of time, you don't know, you started, you don't know if it's going to last 2 months or a year or 18 months, then you would have to, and then more than likely that will result in relocation. Then you have to think about your housing allowance and determine, okay, have I moved? Is my permanent residence no longer my home? So think about when you are working on an interim position as to what is it that is going to trigger to, you know, the housing allowance not being your principal residence anymore. So what is a primary residence? What is a primary residence for tax purposes? Usually a primary residence is considered the home when you spend most of your time, when you know, where you have all your mail going to, where you have your driver's license. And that is for the most part with the test that the IRS will do to determine what is your primary residence. Next slide, please. Okay, so if an interim position results in relocation and it continues for a period longer than of 1 year or less, so then your original home will continue to be your primary residence for housing allowance purposes. So that is a good thing when you don't have to change the housing allowance exclusion related to your primary residence. However, if there is an interim position that will last for a period of 1 year or longer, then you need to start thinking about, you know, which is my primary residence now for the housing allowance purposes. And also, I'm sorry, there is another bullet that I forgot to mention. Housing at the interim location can be treated as a reimbursable business expense. Keep that in mind. So while you're doing an interim work for a period of 1 year or less, any expenses related to being at that other place for that short period of time can be treated as a reimbursable business expense. And that's a good thing. Next slide, please. Back to you, Tony Marie.
Let's go over a couple of examples. In this case, Father Smith owns his home, and he asked the vestry to designate $20,000 of his salary as housing allowance. Now remember, that means that $20,000 would not be subject to federal income tax. it is subject to SECA tax. His actual cash spent, which included his mortgage payments, his utilities, his maintenance, other things like that, and be aware that the IRS has not given us a specific list of items that can be included. But as Dolly will talk about a little bit later, there are some things that we can say probably do count. But anyway, Father Smith's actual cash spent was $21,600. Then he did some research and figured out that the fair market rental value of his home, including furnishing and utilities, is $21,000. And people always ask, how do I figure that out? Well, you used to be able to go to a real estate agent and ask them to help you, but many times they don't do that anymore. So you might be able to go to a place like Zillow and figure out what rental values in your area for your type of home are. In this case, he figured out that the fair market rental value of his home was $21,000. So remember, Dolly said when you're figuring out how much of your income is actually excluded from federal income tax, you have to take the lowest of those three items. First, the vestry resolution, which was $20,000, what he actually spent, $21,600, and what the fair market rental value was, $21,000. In this case, the lowest amount is $20,000. So he's only allowed to exclude from his federal income tax that $20,000. Next slide. So I want to remind you that this can be a very confusing item as part of your taxes. So a couple of things. We think you need to get a tax person who understands clergy taxes. And the second is we do have some resources that are available to you. We have a tax guide on our website. The 2025 tax guide is there for 2024 taxes. And we have a tax return preparation guide and also the federal reporting requirements. All of those are available on our website now for 2024 taxes or looking at 2025. But the information for 2026 has not been finalized yet. We'll get that out as soon as we can after the first of the year. Next slide. And also remember that you can contact Dolly, as she said, and her colleague, Michelle, both of whom are CPAs. And both of them can help answer your clergy tax questions by calling this hotline, the hotline numbers that you can see on the screen there. Dolly is fully bilingual in Spanish and English, and these calls are free to you. We pay Dolly and Michelle to answer the hotline. Also, if your tax person has questions that you want to have your tax person join you on the call, you are welcome to do that. The other thing that we offer is that you can have a complimentary financial conversation with me or our colleague, Larry Dresner, if you have some specific questions about how your situation is, perhaps not related to taxes. And you can see there's a QR code on the screen, or you can go to cpg.org/let's chat, and you'll get an online calendar to set up an appointment with us. Next slide.